Good morning, good morning, good morning. It is Friday, the 16th of May, all day. Today is today is Friday. It is the morning blast. You join me and myself and Mr. Michael Brown to jumpstart your trading day with a review of yesterday, a preview of today. Hopefully, put a smile on your face. But before we do, let's get the legals out the way. So, as usual, nothing discussed in this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed the magnificent Michael Brown. How are you, my friend?
Very good morning, Ryan. Good morning, everyone. Apologies for my lateness. I was on the phone to our mutual friend Kyriakos dealing with some important
How is Special
Pepperstone work.
K?
He's very well. He is very well indeed in sunny
Ah,
Cyprus.
I'll send him my best, please.
I shall. I shall say a very small man on the Kent coast says hello.
There you go. Exactly that. He'll know exactly who you mean.
I was going to say, yeah, it wouldn't take a lot to work that one out, would it?
No, very true, very true. What's been occurring?
Indeed, yes. Good morning, everybody. Happy Friday. We've made it to the end of another long week
Yeah.
in the financial markets, indeed. It was a bit of an odd day yesterday, to be completely honest with you, because outside of the Treasury complex, trade was relatively choppy and quite indecisive for the most part, although we did see equities continuing to grind higher, with the S&P closing around 0.4% higher and the Nasdaq eking out a gain of just 0.1%. As I said, the majority of the interest on the day yesterday came in the Treasury market, with gains seen across the curve as the belly of the curve outperformed, with 5 and 10-year yields falling by around about 10 basis points apiece. Although I guess a little bit of context is important here, because that does just take us back to where we were sort of this time on Monday afternoon, Tuesday morning, with the 5-year around 4% and the 10-year around 4.4%. The other interesting point of note is that we did see the 30-year yield touch within spitting distance of the 5% handle once more yesterday, and then back away this morning. We're trading about 4.85%, so fairly
What's
significant reversal there.
what is your thoughts on this kind of 5% level in 30 years? It seems to be there's more and more chatter about it, saying like it's a psychological kind of level
Oh,
for
it's
Trump
it's
as much
just
as anything.
Well, I can't imagine Trump knows what a 30-year yield is, let alone knowing a level in it. It's like any round number, to be honest. I mean,
Yeah, true.
it feels reminiscent of when we were talking about gold and 3,000. Yeah, you're probably going to end up with a similar situation in the next day or so with 6,000 in the S&P.
Yeah.
It's just a psychological level. I mean, ultimately, whether it impacts the Trump administration or not, we are all biased to work with round numbers.
Yes, yeah. But we do know the Trump administration has a focus on yields. Well, so they say. What would be your guess? 4.5 or 5.5 next?
On the 30-year,
Yeah.
I would say 4.5, purely because I don't think that they would let things get to 5.5.
Ah, that's a shame because I agree. We nearly had the makings for a bet there, but no.
Well,
So
I wouldn't want to take your money twice in a couple of months, Ryan. I do have a heart somewhere.
God, this is why you're just such a nice guy.
Oh dear. What else did we have yesterday? Yes, a very choppy trade across the foreign exchange market. The dollar index chopping between sort of 100.6 and 101 for the majority of the day. We also saw cable tread water around the 133 mark, and the euro edging just north of 112 this morning. Further weakness coming through in crude. WTI down by another 2.5% yesterday, barreling lower to $61.50 a barrel, while gold rebounded, bouncing strongly off the 50-day moving average, up by 1.5%. We have seen a little bit of wind come out of the yellow metal sales this morning, but we continue to trade north of $3,200 an ounce. In terms of fundamental catalysts from yesterday, of course, we did have this deluge of data releases out of the United States. And to be honest with you, it was all a bit of a mixed bag, and none of it provided much by way of signal, if I'm being completely honest. Nevertheless, in the interest of good order, I will tell you all about it. Headline retail sales rose by 0.1% on a month basis in April, marginally above consensus expectations. Good afternoon, Zach. Nice of you to join us eventually. Meanwhile, do you bring a copy of the Evening Standard with him? Meanwhile, the control group sales metric that fell by 0.2% on the month. We were expecting that to have risen by 0.3%. And of course, the control group basket that is broadly representative of the goods that feed into the GDP release. In terms of the other US metrics that we had yesterday, PPI that came in a little bit softer than expected at 2.4% on an annual basis, down for a prior 2.7%. Forgive me, I can't remember who it was that made this point yesterday. It may have been Dario Perkins, actually, that you will see
Who
the
is
impact
definitely
of.
lurking in the shadows as usual.
He's there somewhere, isn't he? You will see the impact of tariffs in CPI before you see it in PPI. Of course, we usually say that producer prices are a leading indicator for consumer prices. That relationship is probably a little bit weaker right now, given the tariffs that have been imposed. We also had the latest jobless
Sorry,
claims.
just because of
Oh,
that,
go on.
just to clarify that, that's simply because the goods that are affected aren't produced in the US. They come straight in
Yeah,
already
absolutely.
produced. Therefore,
Yeah.
it feeds straight into the CPI basket because they don't need to be produced domestically, right?
Yeah, absolutely. It will impact factory gate prices at
Oh
some
yeah,
stage. But yeah, the tariffs are being levied on, ultimately finished goods that are
yeah.
brought into the US and then
You,
sold
you
straight to a
could argue
consumer.
that they're impacting factory gate prices at the same time they're impacting consumer prices, right? So that's
Yes.
there you go. I'm
Yeah.
learning.
There we go. Ryan, the budding macroeconomist,
Whoa,
economist
whoa,
there.
whoa, 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 calm down.
The weekly US jobless claims data was, as near as makes no difference, unchanged week on week. Initial claims at 229,000, continuing claims at 1.88 million. Of course, neither of those prints pertains to the May non-farm payrolls survey week. In terms of other data, industrial production, that was flat on a month-on-month basis, which was a touch below expectations, while the New York Fed's manufacturing index that also came in below expectations, this being May data, of course. But at the same time, the Philadelphia Fed's manufacturing index that actually came in above expectations. So, as I said, all of this data are a very mixed bag and ultimately not providing much by way of intelligible signal from any of it. Of course, none of this going to materially alter the Fed policy outlook, with the FOMC remaining firmly in wait and see mode for the foreseeable future. Incidentally, money market pricing hasn't moved too much. We still see about 55 basis points worth of easing priced by the end of the year. Of course, there were a few trade headlines doing the rounds yesterday as well. Firstly, in terms of US relations with Japan, this is according to GG, citing their sources, GG being a Japanese newspaper. The US is considering the possibility of revising a trade agreement that they have struck with Japan as part of their bilateral tariff negotiations. For those who are unaware, this is actually quite a thin and lightweight trade agreement that the US and Japan agreed all the way back in 2019. It covers market access for a handful of agricultural and industrial goods. And I think the nub of all this is essentially that they want to wrap up negotiations on changing that deal and the quote unquote reciprocal tariffs. They effectively just want to kill two birds with one stone and,
Yeah,
and do those
yeah,
negotiations
exactly.
at the same time, which seems to make some sense to me. Also, on trade via the Wall Street Journal, we heard that the United States is looking to discuss agriculture and economic security with the European Union. The Trump administration has reportedly told EU representatives that they want to discuss tariffs on agriculture and food and other non-tariff barriers in that sector as part of upcoming trade negotiations. You'll all, of course, remember Howard Lutnick going on about how Europeans don't like American beef because theirs is strong and European beef is weak. So God only knows where that one will end up. The US also reportedly wanting to address what they're calling economic security. That is effectively a backhanded way of saying we're worried about how dominant China is in certain key
Yeah, yeah,
sectors of
exactly.
your economy. That would also be, again, much sort of harder to resolve. It's not as if you can suddenly strip out all Chinese technology from your telecoms infrastructure, for instance.
Well, and then speaking of which, we've heard some more stories today about this morning about this these kind of foreign objects that are in inverters and stuff in the US, and
Mm.
this like power supply infrastructure. And then I've seen some stories this morning that are kind of linking it potentially, again, tinfoil hat on time, tinfoil fedora, should I say, to the hacks in that we've seen across the UK today in certain environments, and also obviously the Spanish power cuts and all that stuff. So it's definitely something to keep an eye on, because obviously that will be used as leverage by the Trump administration for any talks with Europe.
Yes, of course it will. But you've got to remember that accepting a free jumbo jet from a foreign nation doesn't carry any risk whatsoever.
But well, no, but also on top of this, funny you should bring that up. So it turns out it's not even from the Qatari government; it's from the
No.
Qatari ex-PM that also, without getting all political on the show. So please don't. To be honest, if you did drop into my DMs and tell me I'm being too political, I couldn't give a shit, to be honest.
Nor can I,
You
so don't even think about trying
You're
that one.
talking the wrong. But apparently, yeah, this guy that's the ex-PM that's given the 747 to Trump, he's like a massive financial backer of Hamas. So how are you left?
Oh,
Oh,
dearie
Zach's
me.
messaging me. Fuck
You
off,
couldn't
Zach.
write it, could you? He turned up late. He's got no standing on this program anymore. Right. Anyway, before let's get back on to slightly safer ground before we end up with some sort of hitman seeking us out. We did hear from a couple of Fed speakers yesterday. We heard from Fed Chair Powell. He didn't make any comment on the monetary policy or the economic outlook. He was speaking more with regards to the Fed's framework review, noting that it is appropriate to reconsider the Fed's average inflation targeting approach, which I'll be completely honest with you, I forgot was even a thing.
Yeah, right.
Back in 2019 when they
I'm glad
unveiled
it's
it, it
not
was
just
like
me.
it was like the biggest change to policy ever. The way
Yeah.
we were all
Oh my
going on
God, I
about it,
remember.
and
That was a
and
good
now I'm
4
just
weeks.
like,
That was a good 4 weeks of Twitter.
yeah, absolutely. And now it's kind of like, oh, I didn't even remember it. Powell was also saying that we might be entering a period of more frequent supply shocks. Thank you very much for stating the obvious on
Cheers.
that one. We also heard from Fed Governor Michael Barr yesterday. Of course, he is still on the board of governors, even though he has resigned the vice chair for supervision role. He was also stating the obvious, really, saying that the economy is solid, but the outlook is clouded by trade, and that supply disruptions could lower growth and raise inflation. Well, thank you very much for that. We wouldn't have known otherwise. Couple of other headlines for the crypto folk out there. I can see Cam is listening in. I'm sure he's all over this story. The SEC, according to the New York Times, they have been probing whether Coinbase has misstated their user numbers.
Yes.
Apparently, Coinbase were running around saying that they had a certain number of users and then quietly stopped saying that, which has raised the attention of regulators, although this probe did begin back during the Biden administration. So it's being reported now. It's not especially new news. Coinbase was down by, around about 10% or so yesterday, of course, having
They also
rallied.
had a hack as well, from what I remember.
Well, yeah, I was just going to come on to that actually. Of course, Coinbase did rally around about 25% or so the day prior on their inclusion into the S&P 500. But as you rightly said, Ryan, compounding that downside is news that they have been supposedly, and those hackers have had access to customer data going back to the start of January, which is slightly worrying to say the least. Moving on from that, in the tech sector, for the AI focused folk out there, Meta, this is according to the Wall Street Journal, citing their sources, Meta are to delay the rollout of their supposedly flagship AI model. This model is called Behemoth, so quite a name for that. This was internally slated to be rolled out last month. Clearly, that didn't happen, and this may now be delayed until the autumn or perhaps even later. Meta trading about 3% lower during the trading day yesterday on the back of that. And last but by no means least, and I promise you it is not April Fool's Day, the World Economic Forum, they are apparently chasing Christine Lagarde as their
Oh,
next
God.
leader after the founder made a surprisingly abrupt exit a couple of weeks ago. Just when you think the WEF couldn't get any worse, although, as was pointed out to me yesterday when I posted this on the internet, there could be a silver lining here, which is that maybe, just maybe, we can hope that the Permatand one will end up leaving the ECB early if she gets this new gig in Davos. Although, sadly, I won't be holding my breath on that one.
And
And
this
that,
all
for the
remember that
moment, is all from me.
this all remember that Christine Lagarde has been done for, like, what was it, embezzlement and fraud.
Yeah,
It's
exactly.
so easy for people to forget that quite key factor. Who she's now running the ECB. Anyway, Michael, thank you so much for that. Let me crack on with some overnight news headlines via our dear friend Zach when he turns up.
Oh, for
Um,
fuck's sake.
Again, if you aren't already subscribed to the overnight news roundup, do so. There's no better way to stay abreast of all the overnight news headlines that you might have missed. So starting off with trade, Trump administration plans to blacklist Chinese chip makers like CXMT and SMIC, but some urge delay for trade talks. Chinese vice president emphasizes shared interests and cooperation potential with the US. That's according to Reuters. Japan pushes for a full removal of US 25% car import tariffs to avoid domestic backlash. Yeah, as we know, obviously, Japan's exports to the US are hugely weighted to the auto sector. Taiwan US trade talks in South Korea yield optimism for reduced tariffs on Taiwanese exports. Japan's finance minister Kato to address currency volatility with the US Treasury Secretary at the G7 conference. India is reviewing US requests to lift ethanol import curbs amid broader trade deal talks. Shipping costs for Chinese goods to the US surge as importers stockpile during the trade war truce. I think I saw some stats about the shipping orders coming through were like 250% up as soon as we had word that there might be some kind of truce between the US and China. US,
Yes, I saw that yesterday as well. The was it Flexport? I think it is. Their
yes,
CEO was saying it. Although I would caution that that's coming off, I think, a base that was
well,
probably
this is it,
zero.
right? Yeah.
So it is, probably flattering reality a little bit.
Yes, yeah, definitely. But I think the trend is there is a big shift to try and get as many boats over during this window. I think you can't deny that. But yes, yeah, be careful when you hear about the percentage increases. US tariffs on Chinese products likely to remain at 30% through late 2025. That's according to a Bloomberg survey. In macro news, Republicans push for Trump's tax bill. That has stalled as conservatives demand deeper Medicaid cuts. Barclays, they're scrapping their US recession forecast. They're upgrading the growth outlook on eased US China trade tensions.
Did
US tax.
we?
Go on.
Oh, sorry, I keep jumping in here. I'm turning
That's
into
right,
you,
mate.
Ryan, which
Yeah,
is
I do the
worrying.
same to you.
Um,
You're welcome.
I can't remember whether we mentioned earlier in the week because JP Morgan did the same. I think Tuesday or Wednesday, they also scrapped their recession call.
Everything's on the word of Trump, though, isn't it? It's like soon
It really is, yeah.
if you get any backward step, recession's back on. US tax
Who would
receipts.
be an analyst these days, eh?
Well, this is the thing, especially genuinely, you make a good point. Genuinely, you know, these notes sometimes take a week to write, and during the time you've wrote it,
Yeah,
it's all
you've,
changed.
you've rewritten the first paragraph 15
Yeah,
times.
exactly that. Exactly that. US tax receipts rise, delaying debt limit concerns until at least August. That's according to the Treasury Secretary. The Trump administration aims to boost domestic production of critical drugs like antibiotics. Japan's economy contracted in Q1, shrinking faster than expected amid tariff pressures. Sigma Japan, the Bank of Japan's Nakamura, urges rate hike pause, citing economic risks from US tariffs. Chinese M&A activity shows recovery signs in the tech sector despite trade tensions. ECB's Villeroy, he attributes economic volatility to trade wars, not currency issues. UK GDP grew 0.7% in Q1. Obviously, we had that data yesterday. Be in expectations despite tariff uncertainty. The RBA to cut rates 25% 25 basis points on
Oh,
Tuesday with two
Jesus.
more. Yeah, go with two more cuts expected in 2025. That's according to a Reuters poll. In geopolitical news, oil price dips as Iran questions US nuclear deal talk, citing contradictory US positions. Pakistan India ceasefire extended in to May the 18th, calming border tensions. US Treasury has warned Hong Kong banks against facilitating Iran's oil shipments to China. That's according to a Bloomberg article. Sticking that way, Taiwan President Lai bolsters military support ahead of potential Chinese exercises. And then just some equity headlines from me. NVIDIA, they plan R&D center in China. Their CEO is discussing with Shanghai's mayor. Applied Materials, they missed the Q2 revenue estimates due to weak chip making equipment sales. Berkshire Hathaway, they double Constellation Brands stake, exits their Citigroup investment. Starboard Value sells half its Pfizer shares after failed CEO ouster attempt. TSMC to expand its 3 nanometer capacity by 60% in 2025 to meet AI chip demand. Global Wafers, another chip name, invest 4 billion with a B more into the US to meet rising silicon wafer demand. ByteDance, they are targeting 20% revenue growth in 2025, rivaling Meta's global business. And finally, for me, CATL, the battery behemoth, they have raised $4.6 billion in Hong Kong listing, pricing the shares at 263 Hong Kong dollars. Back to you in the studio.
So that's about a fiver in proper money, isn't
Well, do you know what? I wouldn't even attempt to guess what that is.
it?
Couple
Probably
of
best.
turnips and there you go.
Oh no! Oh god!
I said
Right, moving.
turnip. There was nothing racist there.
Oh, thank God for that. Right, moving swiftly on from that and on to the day ahead. It is quite a light data docket, actually, to
Yeah.
round out the trading week. Well, it's a bit early, but shortly. What have we got coming up? There's not really anything on the docket through the European session this morning. We do have a few releases out of the States this afternoon, though. We have April's housing starts and building permits figures. Starts expected at 1.36 million, up from a prior 1.32. Permits expected at 1.45 million, down from a prior 1.47 million. Again, this is very, very difficult to imagine this being market moving or significantly altering the policy outlook for the FOMC. The same can also be said of the preliminary consumer sentiment figures for May from the University of Michigan, which we have out at 3 o'clock this afternoon. The index expected at 53.4, up from a prior 52.2. Obviously, the issues with the UMich survey are well documented at this stage, so I shan't go through them all once again, but do keep a close eye on the inflation expectations components as well. A few central bank speakers on the slate: the Fed's Barkin, the ECB's Lane, the BOE's Lombardelli, and Schlegel from the SNB. The earnings docket is pretty barren, but of course, as always on a Friday, do be aware of the potential for de-risking into the weekend, and then also the possibility of gapping risks at the market open on Sunday night and Monday morning. Of course, there are ongoing trade negotiations. Trump is on his way back to the United States via a very brief stop in Suffolk as we go through the day to day. And also, of course, geopolitics as well. We do have these talks between Russia and Ukraine, and the US are involved in Istanbul taking place today. So just pay some attention to that as well. But from me, that is all for this morning and for this week.
Wonderful. As always, my dear friend, Mr. Michael Brown, thank you so much for another great week. Listeners, thank you so much for tuning in. But I know I always say it, but we really do appreciate you, especially our regular ones, and we really do appreciate your feedback.
Even Zach.
Even Zach, when he's not on holiday. Whatever you're doing today and the weekend, have a wonderful one. Stay safe, keep it tight. Remember to factor in the fuckery, and we'll see you on Monday. Much love.
We will indeed. Bye for now.